Let's welcome Beau Lezar with Amerant Bank, who will be moderating our finance session.
Good morning, everyone. My name is Beau Lezar. I'm our commercial team lead with Amerant Bank, and we're excited to be here, part of the West Houston Outlook, and we put together a great panel for you today. First, we're going to hear from Spencer Crone, who is our market manager at our Tanglewood office. He handles retail banking as well as small business banking. Then we're going to hear from Colin Davis, our commercial relationship manager. And last, John Jenkins, who is our mortgage loan officer, handling your home purchase and refinance needs. After the panel, we will have a Q&A session. So please post all your questions in the Whova platform, and we will get to those after that. With that, we'll move on and start with Spencer Crone.
Good morning. This morning, we're going to be talking in detail about consumer banking, kind of how we've seen it change over the last, we'll say about this point, about a year. Ultimately, we're going to discuss three topics of conversation. First, we're going to focus on consumer banking, the actual retail space. Secondly, different ways to access cash. And lastly, the differentiations between loans and lines of credit and why that's important, especially right now as we are in our healthcare crisis. So first off, at the beginning, at least in the Houston area, we saw a closure of a lot of retail spaces and a change and a differentiation where it came to how people were doing their banking. Technology platforms that we've been accustomed to, relying more on those mobile deposits, ATMs, and things of that. But then we also saw a huge increase in the need to talk with and the need to connect with local bankers. We saw individuals needing to go into loan forbearance and different items like that, and that can't be solved with technology. That can't be solved with a simple call to customer service. So here at Amerant, we're really focused on making sure we reached out to our clients, we spoke with them, and we saw and received feedback of the need for kind of that local specialist. So the commercial that you just saw, Brenda at our Katy location, she's dedicated to her clients, and we saw the need for that in escalated national bank wait times and things like that. So we were able to deepen those relationships, but really understand what our consumers and also small business clients needed when it came to kind of restructuring their business and helping them with that. So we saw the coin shortage, the cash shortage, different ways that consumers were starting to pay, an increase of mobile apps within retail spaces. So we were able to really connect with our clients and focus on that. And one of the examples that I wanted to share is, everybody sends a wire. When you purchase a home, you send a wire to a title company. And of course you can, in no matter what your relationship is, you can do that online. But wiring instructions, knowing where to enter those things, that might not come to point. So when in the Tanglewood area, when we saw other branches closing, we were able to help our customers over email. We were able to help them over the phone through our drive up, but we were also able to connect with them. So we had an individual that was trying to close on her home, and she had the title instructions, the title wiring instructions, and she was trying to figure out how to put them in the app. And she was able to just reach out to our banker, John, and he was able to complete the wire over the phone via email, and meet her in our drive-through to sign the form. So that alleviated her stress. And she was very thankful for that. Another thing that we saw and we continue to see is different ways to access cash. So we all know the traditional financing methods like a home equity line of credit or a home equity loan, utilizing the equity in your home to pull out and use for cash needs. But we also saw a huge increase in CD loans and CD lines of credit. So individuals who had a CD product with us, as we saw those fixed rates decline dramatically, going from 2% to 0.25% in the course of 6 months, individuals were able to, instead of breaking those CDs, when they become, when they needed cash, when their daycare closed and they needed to get a private nanny, just different things like that. We were able to secure a line of credit against those assets, so they didn't have to break that term because they only had short cash needs. So we also saw a huge increase in individuals looking for alternative ways to have liquid funds to kind of ensure that as we looked at furloughs and we looked at changes in employment that might be coming down the road, we saw individuals looking to invest in different ways. And so one of the products that we saw a huge increase is actually just simple money markets. So we have an amazing money market product that has one of the highest paid tiered interests in the Houston area. And so we saw an increase in a lot of people keeping more cash on hand than they did in 2019. So lastly, I just wanted to cover quickly the difference between loans and lines of credit. So some questions that I wanted to throw out there and some terms I wanted to throw out so that when you're looking to take on financing obligations, that you kind of look at the flexibility of it, how long you're going to be utilizing the term. If you need $100,000, but you think you're going to pay it off in 9 months, should you get a loan versus a line of credit? Interest only payments to help with short-term cash needs now versus the long-term, and then the fees associated with them. So just focusing on the variable versus fixed interest rates. So we just saw a lot of clients seeking knowledge about different lending needs, seeking knowledge about different ways to access funds for short-term, because ultimately we all know that this, there's going to be an end to this. And so we just want to make sure that we provide our clients with the most knowledge that we can.
Thank you, Spencer. Now we'll turn it over to Colin Davis.
Thank you, Beau. Appreciate it. Good morning, everyone. My name again is Colin Davis with Amerant Bank. I'm a commercial banking officer here. And today we're going to talk and go over a few of our loan and credit products, and also talk about access to capital and how we've seen that change during the pandemic. When we talk through the credit products, little disclaimer, these are obviously not all the different credit products or access to capital offered by Amerant Bank and other institutions, but we wanted to go over the ones that we're seeing the most of historically as an organization and during obviously the pandemic. So the first one we'll talk about, various names, revolving line of credit, working capital line of credit. In most situations, when you have a working capital line of credit, it's to support some type of business growth. And that growth can be related to a number of different things. So for example, we've seen during the pandemic with accounts receivable, some of your best clients may need longer terms to pay you, where they typically pay you in 30 days and that changes to 45 days. So a line of credit can support changes in accounts receivable. When it comes to inventory, during this time, we've seen where clients have been able to receive discounts by buying bulk order of inventories in larger quantities. So a line of credit can support you with that as well. When it comes to accounts payable, obviously discounts for paying early, where you may receive a discount for paying net 10, net 15, instead of paying the typical 30 or 45 days. A working capital line of credit can assist you with that, as well as supporting and bolstering your current cash position. Structures with working capital lines of credit vary from institution in terms of collateral types, maturity dates, advance rates on current assets like accounts receivable and inventory. And typically in most situations, a line of credit is going to be a variable rate or floating rate product that may be tied to things like prime lending rate, or for those who are familiar with 1 month LIBOR, plus some type of spread to add to the profitability for the bank. Next, we'll talk about owner-occupied real estate. Again, owner-occupied real estate is going to look to support something that's changing in your business operations, where that may need more space in your current facility. It could mean expansion in your current facility, so on and so forth. But with owner-occupied real estate, you're going to have purchase situations. Individuals who have been renting space historically may say, I want to build my own equity instead of the equity of a landlord. They may purchase. An existing business who may be expanding to a second location may purchase as well. Also for refinance opportunities during the pandemic, we've seen a number of refinance opportunities into conventional financing and refinances into SBA. Expansion, obviously, again, an existing business owner may need to expand to multiple locations or look to expand their existing facility that they have. Construction, and then obviously rent replacement, which I think a number of individuals have been looking at during the pandemic, really evaluating escalating rent prices in the market compared to building your own equity and making that purchase of your own real estate. Again, owner-occupied real estate has various structures in terms of amortization, terms, maturities, and balloons. Prepayment penalties typically are going to be applicable to loans that have a fixed rate, not a floating rate, and then equity injection requirements also are a varying factor depending on property type, location of property, risk, so on and so forth. Again, with owner-occupied real estate, you have fixed and floating rate options that are available to you. Again, advance rates, which are tied to your equity injection or your down payment, can vary based on property type, location, and other use factors as well. Next, we're going to talk about equipment financing. Obviously, during the pandemic, we have seen a number of business owners use equipment financing to expand operations for business opportunities. So again, a common theme among all these products is supporting some type of change in business, whether it's growth, efficiency, so on and so forth. Equipment can be purchased either new or used. Sometimes you may purchase existing new equipment to replace equipment that is older and obsolete, or you may look to refinance some used equipment that you have on the books that you want to get more favorable terms on, so on and so forth. The loan structures for equipment also vary from institution in terms of amortization, maturities, advance rates, required equity injections, and prepayment penalties. Useful life of equipment can also be a huge factor in determining, the structure of the loan. So understanding the useful life, and again, floating and fixed rate options are available for equipment financing. The last product that we'll talk about in terms of access to capital is business acquisition financing. Obviously, with baby boomers looking to realize and recapture their liquidity event, we've seen more business acquisition financing over the last few years. And business acquisition financing is typically tied to a change in some type of ownership. It could be what we call an ownership of an internal party, which can be a family member. It could be a related party. An existing employees may want to purchase the business, or an outside party who wants to purchase the business. That could be a competitor or someone who currently isn't involved in the business could have a change of ownership. The loan structures and equity injection for this type of product do vary across the board depending on the industry type you're looking to purchase, the expertise of the individuals and management team that are looking to replace the current owners, and that impacts advance rate, so on and so forth. And these are typically going to be fixed or floating rate options depending on what works best for your circumstance. Lastly, when it comes to access to capital during the pandemic, we've seen a number of different changes, but we wanted to highlight some things that we thought were important. We've definitely seen an increase in the use of the SBA guarantee, and clients being more willing to look at SBA structures to offer some competitive down payments, extended amortizations, which impact your payment. Historically, I think sometimes owners have shied away from SBA, but we've noticed during the pandemic that SBA guarantee and SBA loans are on the rise. And I think that goes into the second bullet point. I think the SBA has done a good job at trying to streamline its approval process to meet the needs and the requirements of the communities that they serve. And I think there's been a lot more interaction with financial institutions and the SBA over this period to make sure we get the money to the streets, if you will, to help those businesses that are in need. We have seen some increase in changes to equity injections when it comes to owner-occupied real estate and equipment financing. We've seen a little bit more of that because obviously the pandemic has had an impact on the value of real estate in the market. So, trying to manage that risk from the SBA, the client, and the bank risk has also had an impact on those equity injections. One of the things that I'm very excited about is business owners and the embracing and use of technology, I think has drastically changed over the last year compared to my 25 years in banking. I think business owners' willingness to connect via whether it's Zoom, Microsoft Teams, WebEx, their willingness to connect and use technology to stay in touch with their clients, to stay up to date with what's going on in the various markets. I think that's been a huge, huge difference over the last year compared to historical times that I've worked in the banking industry. I think the use of social media platforms for client outreach, such as LinkedIn, Facebook, Twitter, continues to be on the rise. I think, for example, I have a former client that's a restaurant in the Spring area that invested in a point of sale system that captured email addresses and phone numbers. And they were able to use that information to stay in contact with their customer base and let them know they were still open in business. And that's resulted in them being in an industry that historically has been down, being up 25% year over year. I think one of the last two bullet points, business owners spending more time working on their business, not just in their business. I think this goes to innovation and being adaptable as a business owner. I think now business owners see the reasons that they have to be innovative and have to be willing to adapt and utilize their resources that are in the community, other business owners, their commercial banking officer as a resource to help them support and look at things differently in their business. And then one of the last things we've seen a great deal of when evaluating access to capital, the requirement for projections to kind of forecast where you think you're going. And something that's not on this slide that I'll bring up as well that I think is key, is important. When we're evaluating access to capital, we want to understand the bottom point of the business. What was the low point of the company because of the pandemic? And then we want to be able to see how you performed after the fact so we can get a really good idea of how you're trending towards those projections and those forecasts compared to where you were when the bottom hit for all of us. So thank you for your time. We appreciate it. Beau, and I'll turn it back over to you.
Thank you, Colin. Appreciate that. And I will turn it over to John Jenkins.
Good morning. My name is John Jenkins, and I will be speaking with you in regards to pivoting the pandemic through mortgage. We know since the pandemic hit, we've been able to see some historic rates, and rates are at historic lows. You'll also have noticed that now has been the best time for people to purchase. And we're also going to touch on using your equity to your advantage and also working from home being the new norm as we pivot through this pandemic. One of the good things is that something bad has happened, but it will come to an end. So the Mortgage Bankers Association has stated that rates will be 3% moving forward throughout the rest of the year. Fannie Mae is also predicting that rates will go as low as 2% or even lower. So that's one of the things that we can look forward to in this coming year. And you will also be seeing that a lot of people purchasing as we move forward. 2021 will be the best time to purchase. And I say that because there has been an influx of builder. There have been an influx of builder inventory. So you will see, even though the rates have been low, people have been aggressively purchasing throughout the process. The inventory influx has caused us to stabilize the market. And with that being said, rates are very low And we have not seen them this low in quite a while. We have also seen people tapping into their equity to their advantage. We've seen people refinance for lower rates. The prices and the money that people have been saving has been up to $300 to $400 as they reduce the loan principal. I've seen people tap into equity as well to consolidate debt. There is a lot of uncertainty in the market, and people are looking to consolidate debt. You're seeing a lot of kids go to college, so that's a great opportunity to do that as well. And also remove PMI if you have that. And finally, we have seen a lot of people working from home. That is the new norm. Technology is robust in this day and age, and you have seen a large migration of people from California, Washington, D.C. They have migrated to Texas for affordable housing. So as we move forward through this pandemic, we plan to see a lot more of that, and working from home will become the new norm as we move forward.
All right, thank you very much, John, and I appreciate everybody's cooperation, gentlemen. We will open up to questions and answers. Now, I'm being told we don't have any questions at this point from the Whova platform. That just tells me we did such a great job, so I appreciate that. So, but with that, I'll put everybody's information on the screen, and I do have a couple of things I will throw out to the group as this is what I'm hearing from our clients and customers lately. Colin, I wonder if you can speak to what products are out there for businesses that are looking either to protect their deposits or to kind of make their deposits work for them in this kind of low interest rate environment?
Yeah, really good question, Beau, because obviously, traditional CDs, money market savings account rates are at all-time lows. So depending on a business client's risk appetite, risk level, obviously they can look at, things related to different investment platforms through, Amerant Investments. Also we can partner with some of our third-party partners on what we call ICS, Investment Cash Suite. And that's a really interesting product that allows a client to somewhat imagine if you can diversify your FDIC insurance deposits among multiple banks. So that gives you an opportunity to have your money invested in multiple vehicles, but still have the protection from FDIC. So that's Investment Cash Suite. And that's something that we do work with and offer at Amerant Bank as well. And we've had a number of discussions with clients on that being a potential avenue to get a little bit more return on it, what is a good liquidity position for their company.
Thank you, Colin. I got another question for John. We've all seen, especially on our commercial side, where our clients have asked us for help during this tough times, and it's also happened on the mortgage side. I know there's some clients that are under forbearance or have some type of payment assistance program. Can you tell me a little bit about when a client comes out of that payment assistance or forbearance, do they still have the same rights and stuff available to them, like refinancing, or are there any periods of times that they have to tackle, as some people are not thinking that next step down the road after asking for something like that?
That's a good question, Beau. And basically, yes, that client can move forward and refinance, or they can make additional purchases once they come out of forbearance. Typically, when the process starts of forbearance, or if you're currently in forbearance, what lenders are looking to see is consistent payments for at least 3 months. And then once that's been fulfilled, then you can move forward with your refinance and take advantage of these very low interest rates that we're having right now.
Great, thank you very much. Next question is kind of to Colin or Spencer. Is Amerant doing anything to help speed the process up for clients that are sitting there waiting? They have a lot of things to do. They need help working capital quickly. Is Amerant doing anything internally to help move that process a little quicker that maybe can help those customers get their answers?
So in the business portfolio that I help, we have kind of decentralized some of the processes. We brought them to the branch level that allows us to be more flexible in prioritizing the lending needs of our clients. So when we talk about, like, for example, equipment financing, we have a discussion with the client and we're able to turn around an approved loan in 24 hours. And that really is because we have a dialogue with the client. We understand what it is they're trying to do. We collect things up front during their buying process, maybe. But it's also because we have the ability up to $100,000 to make the decision at a local level. And that's kind of unique. That's something that we kicked off probably last April as we saw the need for those injections into our small business clients, the need to kind of tackle that older equipment, and the need that the manufacturers are offering competitive pricing, lower pricing on that equipment. So that's an example of something that we've done. We've done it with quite a few of our lending products. So that's in the small business sphere that I help.
And I think I just have one more question kind of for the panel for either new clients coming to a bank for potentially lending products or existing clients. Is there anything underwriting is doing differently with the impact of the pandemic on all industries that they might be asking for? I know, Colin, you touched on a little bit about seeing where that kind of tranche was and then the growth month over month. Is there anything that we're seeing that we can help our clients with from the front end about document preparation?
Yeah, Beau, I'll take that. I think that, again, the key is obviously, I think most clients are prepared, making sure you're working closely with your financial team internally and externally, your CPA, to make sure you're continue to be prepared. And again, I think the biggest thing is really getting access to capital on the business or commercial side is about business owners really talking us through how you were impacted from revenue, margin, expense situation during the pandemic, how that has changed over the last 6 or 7 months based on things that you've done differently internally, improving efficiencies, whether that's whatever you've done, making sure you help us understand the stories. The numbers are the numbers, but helping us really articulate and understand the story of the numbers is something that's important. So that means the business owner and his internal and external finance team really working in conjunction with us to get to what the end goal is for all of us, to get a loan approved and closed, to provide clients with the access to capital they need, to provide for their families and their employees and their families in the communities that we serve. So I think it's still being prepared like you should always be for access to capital, even when there's not a pandemic, but really being able to walk us through the bottom. What did you change to bring it back up? And what are you going to do to keep it there? And if the bottom comes again, how are you more prepared than you were the first time?
Thank you, Colin. I appreciate that. Well, with that, we will wrap up everything here. I have everybody's contact information on the screen. I would advise you, these gentlemen are some of the best in their field, so please reach out to them if there's anything further you want to discuss. We appreciate having us today. Thank you to the Chamber. And with that, I will wrap it up. Thank you.
Thank you so much to everyone on the finance panel. We know that now is a time where many of us are figuring out how to best make every dollar work for us in our businesses as well as in our personal lives. So thanks to the panel and Amerant for that great information.
It was the right time to look for our new home. Our family got bigger and our space got smaller.
We started looking at our favorite neighborhood, near great schools, and close to where we work, too. And after a couple of weeks, we found it.
When I first saw the look on her face, I knew I couldn't change her mind.
It reminded me of my parents' house.
But like all big decisions in life, we needed help to make it happen. When I first spoke to Joanna at Amerant, we spent the first 20 minutes talking about the home. She lives in the same neighborhood, so she was excited to share her experience.
Whether you have a $1 million budget or just a portion of that, my goal is to always make it a great experience. I want to be there every step of the way facilitating the process.
We had shopped around looking for the right bank, but what convinced us was the accessibility to Amerant's team of experts and their personalized approach in helping us find the home we wanted. This isn't our first home buying experience, but this is definitely the first time we enjoyed the process. And we actually closed on schedule.
Every individual's needs are truly unique. And because we are part of this community, we're better suited to tailor financing solutions to meet their individual goals. I take pride in what I do. I take pride in helping people realize their dreams.
We're the Shermans, and we're happy to be home.
What does it take to be the nation's #1 cancer center? It takes subspecialists with an unmatched depth of expertise to turn research into breakthroughs and trials into groundbreaking treatments. It takes prioritizing safety, compassion, and an unwavering commitment
My last chemo.
to ending cancer. What will we do in the pursuit of making cancer history? Whatever it takes.
Now more than ever, I invite you to join the Houston West Chamber of Commerce. We are in business for business. Please join us.
Now more than ever,
Support your local businesses.
now more than ever, increase your visibility.
Have your voice be heard.
Increase your search engine optimization.
Now more than ever, increase your relationships.
Increase your revenue.
Increase your network.
Increase your sales.
Now, more than ever, increase your contacts.
Increase your marketing.
Now more than ever, come together as a community.
Now, more than ever, join the Houston West Chamber of Commerce so we can continue to support our local businesses.
Our goal is to get as many employees and medical staff to get vaccinated as quickly as possible.